that stock market. Welcome back. This is another episode about the stock market, obviously. We're going to have a pretty big conversation here because of the recent events that have been taking place. The current drop in the market has probably scared a lot of you guys, and I know that because when I first started out and we had a huge drop in 2018, I think it was like December, November, I know that scared me, seeing my actual portfolio take such a huge hit in such a short span. It was almost panic attacking me, you know what I mean? So what I'm here to do is hopefully here to talk to you guys about what does it really take to become an actual investor, the overall mindset that you actually have to be in to be an investor, especially during these times with the volatility that's out there. And I'm also at the end gonna go over two different stocks, because both of those stocks are going to cover a topic each. So I'm gonna overall cover three topics really that I think are important when navigating through a recession or an economic collapse such as this. So let's start with topic number one, which is one of the most important things that you actually have to have as an investor. This is almost a necessity, which is the mentality. You have to have a certain mentality when it comes to being an investor. The first thing I really honestly suggest when it comes to the mentality aspect of it is just don't listen and just forget about what you hear on Wall Street when it comes to the analysts and what you hear with anything on Wall Street, because just flat out they're playing a different game than the game that you and I are playing. The lingo that they're going to spit out is just straight up going to confuse you, and it's not going to serve you really any good. It actually won't serve you any good at all. So use it as entertainment, and solely for that. Don't really use it for any kind of actual advice or tips, because they're not playing the same game you are. So if you go based off of what they're going on, you're just going to lose out 9 times out of 10. So that right there alone is going to help out with your mentality just off the bat, because you're not going to have to worry about the constant wishy-washiness that they have to go through just to cover their advertisements and their bottom line. I mean, they're going to talk about the stock market needing this one day, and then if the stock market just so happens to actually give it to them, they're going to flip the script and say something completely different, because they have to keep things hot. But in the real world of investing, things are slow. And that's the mentality that you have to have, is slow, long term. We invest not for the 3 months or the 6 months or the 1 year or even the 5 year, really. I mean, ideally, you want to invest for about 10 years out, if not the life of whatever stock you're holding. However, some stocks, especially when it comes to like the tech sector, I know that they can have some very drastic runs on the upside, which, after 5 years, you might want to sell a little bit or all of it, and start a new position or whatever the case may be, depending on whatever age you are, because there's a lot of factors that go into it. But just the overall mentality you should have is long term. And the second thing is, you really honestly don't ever want to worry about the stock price itself. The stock price itself is almost irrelevant. It's an arbitrary number. It doesn't really mean anything at the end of the day. The only time it really means anything is when you're selling, obviously. But the stock price itself, the second you stop worrying about that is the second you stop worrying about what's happening right this very second. Everybody's portfolio, no matter who you are, no matter what sector you're trying to be in, your portfolio is down. It's 100%. Every sector across the market is down right now. So, and that's just how it is. So if you constantly worry about what the stock price is, then you're constantly going to be worried. And as a long-term investor, once you actually make that initial investment and you make your position, that's it. All right. You're going to start building that position, and that's going to be your position for the next 5, 10, hopefully 15 years plus. So whatever the price is right here, right now, is irrelevant when it comes down to, 10 years down the road, 15 years down the road. As long as you have picked a strong company that's going to last throughout the years, then you're not concerned with what's happening right now. Actually, on the contrary, you are very ecstatic about what's happening right now. So for me personally, I'm actually really excited about what's happening. This is literally, in my mind right now, this is a make or break moment for anybody. This is legitimately how millionaires are going to be created. People are going to be talking about this moment in history books in years, and they are going to be wishing that they had the opportunity that we have right here, right now, to buy some of the stocks that are currently available for the prices that they are available. For the first time in years, the fundamental basics of stock long-term investing is actually being realized. We can actually use things like the book value of what a stock is. And we might actually be paying book value for some of these stocks. It's amazing right now. So it's a very exciting time. So mentality, it's huge. It's one of the biggest things you can have as an investor. And once you really start giving into being an investor, which is long term, then you really start changing your entire mental aspect. And it really is going to shave a lot of worry off of you, especially when we're dealing with a recession and damn near an economic collapse right now. So stocks are plummeting. It is what it is. But what I want to bring you to is this right here. So this, if you guys are not familiar, this is a stock chart. Okay, and I currently have this on the S&P 500. Okay, so this is the entire market for the S&P, and I have this for the entire life of the market. So this dates all the way back to like 1928. So I mean, from 1928 all the way till now. This is exactly how the market has performed. And if you listen to my last video, you would know that there was 4 different recessions that actually happened. And as you can tell, each and every one of them, one of the biggest ones being in 1929, which is right over here, is just a speck of dust when it comes to what the actual market does as the years go on. So I like to actually take a look at this chart because for me, being a new investor, just like you guys, sometimes, yeah, it's human nature to get a little bit concerned. But when you take a step back and you sit back and you say, okay, look, we have had some crazy times with the Great Depression, the stock market crashes that we've experienced, the wars that we've been through, the things that this world has seen within the years that we've been here and that the market's been alive. We have done nothing but shoot up. So over time, given another 20, 30, 40, 50 years, I mean, just imagine the growth that's going to happen. So just take a step back, just take a breather, understand that we are actual investors. We're not traders, okay? We're investors. We deal with the long term. These short term influences, like right now, it's irrelevant. So the second topic that I think we should really get into is going to be actual stocks that you can select through a recession. Now, during times like this, the entire market's down. So just know that anything that you invest in is going to go down. You're not going to be gaining money anytime soon, okay? What you're doing is you're building for the future, okay? So the second and the third topic for today is going to be about the stocks that you can actually pick and navigate through during a recession, okay? So once you got your mental game strong, the second thing you're going to want to start doing is finding out what stocks can you actually invest in, okay? The first one that I strongly invest a lot of people to start out into is ETFs. Now, this is going to be one of the safest moats to possibly invest in, especially during a recession, even when the market's down, because what an ETF is you're not just buying, let's say, one company like Apple, okay? You're buying the entire S&P 500. You're buying the top 500 companies that the US can produce, okay? And there's a wide range of ETFs. So an ETF is a bunch of companies put together. So in order for an ETF stock to go down, a bunch of companies actually have to go down. So ETFs are one of the safest ways to invest because it is one of the best ways to diversify your portfolio in the easiest possible manner. Okay, so the very first ETF that I'm probably going to show you guys is actually one that I'm currently invested into, which is ticker symbol QQQ. Okay, now this is going to be the NASDAQ 100. I personally prefer tech stocks, okay? I'm a younger person, so I like to go a little bit more aggressive. Now, depending on your age, you might not want to be so aggressive, okay? Now, for me, it's different. So, QQQ, I just happen to know just all around solid stock because this is the NASDAQ 100 ETF. One of them. There's many different ones. This is one of them. This one has, it follows the NASDAQ 100. So whatever the NASDAQ 100 does, this is going to do. And it makes it affordable. It makes it cheap. Instead of buying the entire NASDAQ, which is an insane amount of money, you can buy the ETF for $169.30 a share right now. Which during these times, if you look at this chart, if you don't know how to read a chart, that's fine. I will make a video probably in the future showing you guys or outlining it. However, for right now, I'll try to break it down as simple as possible. So this red bar, right where it says 169.3, that's where the market closed. So what I do is I like to take my marker and I like to just track it along this line. And you can go all the way back and see exactly when we hit that price last. And sometimes we can go back all the way years and years. So usually when the market drops, what that allows you to do is it allows you to recuperate years and years of investing. So let's say you invested, let's say right now, okay, in 2020. Well, right now in 2020, if you were to start buying purchasing shares in the market, you would pretty much be buying the same share at the same price that someone was purchasing back in like 2018, 2019. You know what I mean? So you're recouping 2 years of investing time right there just because the market is down. And we're long-term investors, so we know that overall the economy, the U.S. economy is going to strengthen itself up. It's going to go up over time. So we know that holy smokes, we're getting this at a fat discount. I'm recuperating 2 years of investing time. I mean, this is phenomenal. So this is definitely a stock that you guys can take advantage of if you guys want to. I definitely do advise you guys, do your research, look at it, because ETFs, they do have fees in them. I believe they're annual fees, the ETFs. However, the QQQ one is actually one of the lowest fees, and it's a Vanguard. So, or it's actually Invesco, I believe. And it has one of the lowest costs to it. So it's, for the bang for your buck, QQQ is very, very solid. Very solid. So the next one that we are going to be looking at, and it's going to bring us to topic number 3, is going to be single stocks or solo stocks. So single stocks, this is where you start getting into heavier waters, because now you aren't diversifying unless you personally select a group of stocks individually that are pretty diversified among themselves and among the sectors. So you're not going to get as diversified, nowhere near as diversified as you are with an ETF, but solo stocks or single stocks are an incredible way to get gains, and it's one of my favorite ways of investing. It's actually one of the ways I think I'm probably like 90% single stocks right now. I only have I think it's like 10% in QQQ, so I don't have much. I have most of my money tied up in single stocks. So this is also going to be the form of investing that is probably going to make your heart race the most, because you're going to really start seeing your stocks jump up and down quite a bit during times like this. If the market, like the S&P 500, goes down 10%, well, there's a real good chance that your stock probably went down 15% or 20%, you know? So your single stock, if the market is down, is going to be taking a bigger loss than what the market is going to be taking usually, because in order for the market to come down, every stock basically has to come down, or a huge group of them, or, you know, one of the bigger ones. So just keep in mind, we are long-term investors. So single stock picking is no different than picking an ETF. It's all about finding the strong, reliable companies that have very strong financial sheets. So you want to pick a company. When it comes to single stocks, you really want to have a few things come into play, and I will make a video that goes more in depth on this, because it's a long conversation, but for now I'm just going to give you a few keys. Really what you want to have a lot when it comes to is a solid balance sheet. You really want your company to have a moat around it. So like Apple, for instance, its moat is it's got its own economy. It's got its own product lines. Every single one of them communicate seamlessly. And basically, when you purchase one, you're going to purchase every single one of them. So you're going to be in that ecosystem. So that's their moat. It's very strong. A lot of companies have moats. Tesla has a very strong moat. So moats are very, very key. And then I know this is going to fall into their balance sheet, but it's very crucial for me, is cash reserves. You want your company to have some cash reserve on hand for times like right now, because when, you know, stuff hits the fan, you want your company to be able to have some cash to withstand what's coming. So those are just 3 things, very short, on a single stock, and the one that I really strongly suggest right now would probably be Apple, actually. I think ticker symbol AAPL. Yeah. So this is, again, I have this set for the life of it, so you're gonna see the life of the stock itself, which, as you can see, man, you can buy this for a really good price right now. So Apple, strong company. I mean, once the economy picks up and everything else bounces back and 5G comes to fruition, holy smokes, this company is going to go through the roof. Apple has not had a breakthrough product in quite some time, and their next breakthrough product lines is going to be their 5G product lines, and it's going to be phenomenal. So if you can buy in now as the market's starting to come down, and you know, you can wait a little bit and see if it comes down a little bit more, but it doesn't hurt to start positions. You know, you can start a position and just have in mind that you're going to be buying at a lower price. So that's what it's just gradual investing over time. You want to build your position. But, you know, once your position is built and the economy bounces back, boom, this stock goes up, and so does your bank account. So, I mean, that right there really is how you navigate through a recession or even an economic collapse. Is you just have to have a strong long-term mentality, and you have to pick your stocks wisely. Strong balance sheets. ETFs are very good for diversification, and just be patient. Don't freak out. So I hope you guys enjoyed. Hope you guys took something away from this. I know I babbled on for a lot and stumbled over some stuff. So if there's any corrections, let me know in the comments. I'm not perfect here, so I make mistakes. I'm kind of doing this thing live, so we'll see how it goes. But yeah, if you guys like it, follow, like, all that good jazzy stuff. And thanks.